Welcome to Everyday Economics, a weekly podcast about the economics in daily life. I'm your host, Puja Mehra.
The latest financial stability report of the Reserve Bank of India has projected a sharp rise in the NPA levels in banks. The banking sector's health was not good even before the COVID crisis started, but now, with many borrowers either unable to repay loans or hoping to leverage the economic situation to get concessions on their repayment obligations, the financial sector's difficulties are going to increase. Strangely, the popular narrative is more concerned with the problems of borrowers, not the safety of the money of savers and deposit holders entrusted with banks that they then use to make loans to borrowers. If the loans don't get repaid and NPAs increase, what will happen to these banks? And what will happen to our money held in accounts and deposits in these banks? My guest this week has been my favorite boss and is also a senior from my college, the Delhi School of Economics. Subhomoy Bhattacharjee is a consulting editor for Business Standard and senior fellow at the Research and Information System for Developing Countries, RIS. I talked to him about the two books on the theme of banking and NPAs that are in the news. These books are Overdraft, Saving the Indian Saver by former RBI Governor Dr. Urjit Patel and Quest for Restoring Financial Stability in India by former RBI Deputy Governor Dr. Acharya. I asked Subhomoy about the takeaways from the two disquisitions and if the government can be expected to factor them into its policy approach going forward.
Welcome to Everyday Economics, Subhomoy. I'm really thrilled to have you on today's episode because you are among my earliest and favorite bosses. You taught me journalism. I never went to a journalism school. And we are recording this episode on Teachers' Day, although it got scheduled today purely by chance. But my best wishes to you for Teachers' Day.
That makes me sound suitably geriatric. I just
No, come on.
got off of your audience just by that. But anyway,
No. Right. So today's episode, like we were discussing, is going to be about the two books that have sort of created a whole buzz around the banking sector and its problems. To begin with, I just wanted to get your sense of what are your takeaways from the two books, what they're saying about the whole NPA problem and the banking sector problem and the various things around that.
it's interesting, Pooja, that you referred to the teaching motive as you started off, because I suspect, and that's not a very original idea, but essentially Urjit and Viral are sort of trying to teach some basics to RBI, and not just to RBI, basically to the government, to the fiscal, or rather to the political executive. So they are sort of both of them. In fact, it's interesting that you refer to both books because both together should be read, and they have a very common thread, which is that there is a particular role for the fiscal policy, there's a particular role for the monetary policy, and nations start getting into trouble, especially developing countries, when these boundaries are breached. Viral, of course, comes along very strongly, but Urjit shows the result of that, of what has happened. So Viral's, I would say, is more. Like he's laying out the theoretical framework in his book when he talks about the fiscal, the word that he uses, the fiscal overbearing prominence of dominance in the entire system, and Urjit lays out the details of what that it led to. His analysis of how, for instance, the IBC structure, the Insolvency and Bankruptcy Code structure which was laid out with considerable amount of diligence, has come a bit unstuck. How the NPA problem, which had never gone away, threatens to become even worse by removing the barriers that he had set up with his February circular of 2018. So all of these are very, very strong demonstrations. I would say again, as I said, it's a theoretical basis which Viral works out, and Urjit explains what it leads to. So they are a very powerful set of analysis.
And given they have informed us and like you're using the word, they have almost tried to teach, because these are difficult things to understand, the technicalities of how NPAs build up, what they do to the economy, what do they mean for growth. Sometimes it's not very easy for politicians or even bureaucrats sitting in finance ministry to be able to see these things, because they play out over a period of time, and typically bureaucrats and ministers tend to be in those positions for a short period of time, and they don't have the technical expertise to be able to do this analysis. So both of them have done that analysis and put it forth. They both stop short at saying that, what this could lead to in the current situation post COVID, although they have given us enough for us to be able to apply it to this situation. And although at least Dr. Patel, but also in his post book release interviews, Dr. Acharya's also, they both kind of try to say that the RBI has been amiss, not just right now, but over the years, in not being assertive enough in informing or educating New Delhi about this problem, what causes it, and what it could lead to. So, but they have explained this, and how do you see applying what they have said to the current situation? The RBI has also put out its financial stability report, where they're projecting an increase in the gross NPA ratio to 12.5% under the baseline scenario, but in the severe stress scenario, which is quite likely, to an increase to 14.7% by March. Given what they have told us, and given the RBI is itself now saying that their financial stability analysis shows that NPAs are going to rise so much, what is the system's capacity, you think, to deal with this situation? How much do you think Delhi understands this? Do you get the sense of Delhi getting sensitized to what these two former central bankers are saying, and now the RBI is also beginning to say? Is Delhi sensitive enough?
Well, let's look at the first part of what you said, which was that both. I mean, you said that both Urjit and Viral did not say in what shape the crisis would show up this time, which I think was a very smart thing to do, because that could have taken away the this emphasis in their book on trying to understand the dynamics of the problem. What you've said is absolutely correct, that essentially this problem, the fiscal dominance of the economy, is something that comes along because of the fact that uh, finance ministers obviously are political creatures, and they respond to a very short-term demands, and they get agitated when successive RBI governors try to read, I won't say reading the rule book to them, but try to tell them that you go by systems. In fact, this has been the problem in India for several decades. We have not agreed that there should be a certain system or a certain method of operation between the fiscal and the monetary policy. Or let's put it this way. We talk about the fact that in 1990s, the RBI used to take part in the direct monetization of the government's debt. It worked out through between 99 and 2003. It worked out a series of sort of barriers for itself, checks, starting with the Rangarajan's lecture, the Kuti Memorial lecture, where he outlined the steps of what should and RBI shouldn't be doing, leading on to the FRBM Act, which laid down where exactly the fiscal role should be, where there should be a boundary for the fiscal authority. What the RBI essentially was doing, and the finance ministry at the time also agreed to, was that there should be certain checks and balances in the system. So when I say that yet there hasn't been adequate amount of application of that principle, is that those checks and balances have worked only when the economy has been doing fine. Whenever there's been a pressure, finance ministers cutting across party lines, have found it expedient to move into monetary policy, which Viral talks about as using the fiscal dominance to offer support to the economy, which the fiscal position couldn't do. Now, this is where we do not seem to have learned from the. I mean, no period has ever shown that this lesson has been learned well, and this is something which, again, in the current circumstance, is again coming back to haunt us. The IBC and again the current stress on lifting of moratorium or doing something to ensure that there's no interest charge on interest through the guise of going through the Supreme Court essentially is a way of telling the central bank that do not try to create a systems-based approach. And this is something which creates repeated level of problems, because a problem would definitely go away. The COVID crisis will at one time sort of come down in its intensity. But the lessons from the crisis we would not have learned if we do not take steps now to say to show that yes, these lessons have been learned. And the big problem from this is that when we don't learn these lessons, it's not just that there are short-term risks which have to be faced. So therefore, the finance ministers take up steps. It's also that they hurt the long-term interests of the economy in terms of attracting capital, in terms of pushing up growth, in terms of pushing up productivity in the economy. The economy, and this is particularly sad because what it has is that it ends up hurting where no political executive would want the hurt to be there. For instance, it hurts the savings behavior of the households. The households' savings behavior is affected because when the monetary when the monetary policy is not able to transmit well to the real economy, the household savings do not come to the financial sector. It ends up going to non-financial means, real estate, gold, and anything else, which is not what you would want if you want to mobilize savings for expanding the productive capacity of the economy. And by doing that, it ends up hurting the worst possible, the sectors which actually need those savings the most, which is the MSME sector. And this is where the short-term behavior or the short-term understanding basically leads to problems. So essentially, this is where the challenge comes up again and again. And you know what I feel sometimes uncomfortable is that this is a discussion that we had during the time when Rangarajan was writing out his series of essays. This was something which we had when Reddy was talking about these restrictions in the run up to the global financial crisis of 2007 and 8. This again happened during the time when Rajan was there, and now again this discussion has been happening. So that's why I say that India doesn't seem to have, despite laying out the rules, those rules get flouted pretty often by the fiscal dominance. And this is where the challenge comes along. And that leads on to what you were saying about what the RBI is also now saying, that by flouting those rules, we have not shown that we have learned from the past. So the NPA levels are now going to look like it could escalate to, as you said, 14.7% under very severe stress. It could in any case go up to 12.5% by 2021. And this means that the cleanup job will again have to start from scratch, which means that the government will again have to start working on the rules of, laying down rules for how to recover the public sector banks, take decisions on whether what sort of capitalization, how there will be capitalization, remember at one stage we had talked about capitalization through an instrument called hybrid capital, which was neither equity nor debt. In fact, it was neither fish nor fowl nor anything else. And as a result, that capital didn't help the banks at all to be able to feel confident to give out and give loans. So, and that created what Viral's thesis, even in when he had before he had come to RBI, he had talked about this phenomenon of zombie banks. In fact, he had used this word zombie banks in reference to the Italian banks, and he's sort of now seems to say that the Indian banks are pretty much showing up the same sort of behavior which afflicted those banks in Italy and created a first class crisis. So the financial stability report, at the end of all this discussion, where does it say? Well, it says that there are macroeconomic risks, there are growth risks, but there are also institutional risks. And those institutional risks are something at very high, which we should not have been having if we had learned the lessons of the past few decades well and had agreed to a clear difference between what the role of fiscal policies and the role of the monetary policies.
What you're saying reminds me of two things. The first is, something that actually I wrote in my own book, at the risk of sounding immodest. In my book, I document how after the global financial crisis, when the late Pranab Mukherjee was the finance minister, and the RBI was not getting its monetary policy right. So where I analyze that, I reproduce an anecdote which was given to me by somebody who used to at that point in time work in the finance ministry when Mr. Mukherjee was the minister. And he described a meeting at which the RBI governor was present, the then RBI governor, Dr. Subbarao, and the various finance ministry officials were present, and Mr. Pranab Mukherjee was present, and they were discussing what can be done to pull the economy out of low growth and protect it from slipping into the kind of the global downturn that was being seen. And the finance minister was mostly quiet, but he had deputed an officer in the ministry, a senior officer in the ministry, to do all the talking. And this person kept saying again and again, and the finance minister, with the finance minister's backing and nods, that they kept saying that we don't have any money in the ministry or in the exchequer to give any kind of push to the government to the economy. We can't do anything at our end. Whatever needs to be done has to be done by the RBI, and that's the pressure they kept applying on the RBI. And you'd recall that it was what was called at that point in time the asset stimulus, which was a very nice way of saying just indiscriminate lending, which Dr. Rajan, Dr. Patel, even Dr. Acharya have called exuberant irrational exuberance around lending, and that kind of lending without sufficient due diligence about the viability of projects is actually what in the first place triggered this round of NPAs that they were dealing with when COVID happened, and all that going easy on loans, which by the way helps everybody. It helps the defaulter because they can evergreen their loan, they get more money to repay old loans, their assets don't get taken away. It helps the bank because the bank's balance sheet doesn't look bad, it continues to look all right because that defaulted loan does not show up like an NPA, and they don't have to do the capital adjustments to cover up for the NPA. And it also suits the government very well because the NPA level does not rise, it artificially looks low, so they don't have to put in capital into the bank. They are as it is stretched in terms of fiscal space. So it suits everybody in the interim, and that's what was happening at that point in time also. But we know how that became an NPA problem. That problem is what IBC was supposed to solve. But now the same thing is, like you said, the same mistake is being repeated again, and loans are being restructured. There's a lot of clamor from one sector, other sector, one size companies, other size companies. Even the Supreme Court wants to look at whether a particular loan should be declared as a moratorium or as an NPA or not. The Supreme Court has said that banks should not classify NPAs until their case that they're listening about the moratorium is heard. Basically, the Supreme Court is getting into a commercial contract between a borrower and a lender. at this rate, one could argue that, will the Supreme Court tomorrow begin to get into commercial transactions between me and the shopkeeper that I buy my groceries from? Will the Supreme Court want to say that, the tomatoes that I'm buying should be sold on these terms, and I am going to get so much time to pay for those tomatoes? So what I'm trying to say here is that, of course, our politicians don't have the patience with these things, but even something like the Supreme Court, and is sort of entering into this area, and there's so much populism around this whole thing of loans. Everybody's sympathy is with the borrowers and the defaulters. Suddenly, this was not the case when we were talking about cronyism, and nobody seems to worry at all about the health of the banking system and the savings of large number of Indians, that is with the banks. The banks are, after all, also the safeguards of the savings of savers. uh, how has this how can this narrative sort of be set right in your view? Is the government sufficiently sensitive to the interests of the banking sector and the savers?
That's exactly the point, Pooja. I mean, I'm not surprised the Supreme Court has got in. Supreme Court is sort of, the surrogate voice of what I might call the popular opinion, and having no particularly what I might call expertise in handling this sort of a thing. It's wading into an area where it shouldn't be. But the good thing that I take away from the Supreme Court's intervention is that matters had to reach Supreme Court because unlike earlier, today there are far more voices, people like you who are talking about rules-based system. And the reason why we are having this chat today in the context of Ujit Patel and Viral Acharya's book, because of that, it's become difficult for any government of India to write down a rule which sort of simply washes away the sin of any sector. The private sector had earlier also been part of the lobbying group whenever they'd seen that the government was not really ensuring an arm's length relationship between itself and the monetary policy. But it had had an easier access and easier way to get its problems to be made to be socialized by using bank money. It's not been so far been possible. So to me, one reason I like, what I see in the Supreme Court is that, things are being forced to come out in the open. A government office as the one that you talked about in Pranab Mukherjee's time, their decisions could have been taken without too many people being the wiser. A decision would have been sort of been handed down. Today, it is not possible to do so, and that is a good part of it. It is being discussed and debated in a public forum. That I think is something we can say that there's been some achievement there. Whether this will still stop the damage from happening, we'll have to see. As of now, as you can say, the omens don't seem very propitious, but still, I'm a bit hopeful. What I'm particularly concerned is that the RBI or it's not that the reason why too many people do not seem to be concerned about what's happening with the banks is because the banks are largely with the government of India. So when you say what should be the steps taken, this is the point where if a large part of those banks can be privatized, and I really think that is the way to go about it. There is no other way. Any other way, any other step will definitely not solve it. We have tried every one of them. That is why we know that they will not solve it. But if they're privatized, the share market, the investors will obviously say that it's not on. And the reason why and when it's not on, then obviously we look out for systemic changes. So that is the fundamental change that has to happen. If that doesn't happen, and if that keeps on getting delayed, it is a difficult position. Now again, the fact that the government is having problem recapitalizing the banks And today they cannot possibly get away by issuing what I talked about, those hybrid loan hybrid instruments. Today it has to give a clear capital equity support. Otherwise, the banks would really be hammered. They simply will not be there as a going concern. In that case, the government is more difficulty now means there is more opportunity or post opportunity to make the banks become privatized. Some of the banks definitely, I do not see any reason why, other than State Bank of India, the other banks are really there. When I go into these banks, I look at their operations. I do not see any organized thought on credit structures, on understanding how to give out, I mean, analyzing major loans. The officials are not there. In Punjab National Bank, for instance, you would know that just 23 corporate branches, just 23 corporate branches, the big corporate branches account for about 70% of their total credit portfolio. And those 23 branches have an acute shortage of senior officers who can give out credit. Posts are vacant there. And this, we are talking about an entity which has got already three banks. I mean, three banks have come together to become
It's the
the
second
new.
largest. It's the
It's the
second
second
largest
in
bank. Yeah.
that bank, you aren't able to get senior officers who know and understand the market to be able to do credit appraisal. That bank, I frankly speaking, I do not expect that bank, even if it was given the leeway to give the permission and its books were cleaned up, it'll be again be able to do credit appraisal. It frankly doesn't. And I'm not just saying about that bank. This applies to all of them. They frankly have gone beyond their ability. I mean, their use by date. Their credit appraisal today, I would suggest, should actually be, I mean, that entire money, entire treasury, entire operation should actually be used through the SBI. SBI should have the right to appraise projects, give out loans, and then decide which banks will take on whichever share. These banks simply can't do it. Rather, they'll create trouble, and they will create even more trouble then when the borrowers come back to try to ask for evergreening or anything, because these banks have not really appraised the credit. So how do I expect those banks to be able to take a reasoned appraisal of where the credit should be called back, whether it should be ever given a fresh loan? No, it's not possible. So that is something that's not being understood, and that is very necessary. But as I said, since a large part of the dirt is coming out now, ports, as I said, I mean, well, I agree to your tomato analysis. In fact, that's a good piece of analysis there. But I would say that like making it look like a vegetable market or a fish market, call it whatever, is probably necessary to allow these things to come out and be visible to the people.
Yeah, and whenever so two things again, whenever people talk about privatization as a solution, the immediate response from the anti-privatization school of thought tends to be, but private banks also have problems, and there, clearly, no, it cannot be that there would be a section of banks that will not have problems. Clearly, private banks will also have problems, but just compare the NPA levels in the overall private banks with the overall public sector banks, and the numbers and the facts speak for themselves. One, and two, even if there is no privatization happening in terms of ownership, like I think Dr. Patel's book brings out, the market has figured out, and the deposits and the savers have been moving towards the private banks, also because they're more efficient, their FD rates are higher, their terms of operations are simpler. The market is actually on its own moving in the direction of private banks. So that's a message that the government should be sensitive to also, that it just might be too late for them to begin to think of creating value by privatizing. The market just move away.
That's right. And in fact, I mean, you're making a very major point that private banks will have problems, but that problem is for the shareholders to handle. In a government run bank, the problem is of the entire tax-paying population. So today, the poorest person who pays a tax also takes part in the recapitalization of the bank, public sector banks. She may not have a deposit with the bank, or even if she has, that's a puny part. But her tax money also is sequestered by the government to be able to recapitalize the public sector banks. That's an important difference between a public sector bank and a private sector bank. And again, when people say that no, but hang on, private sector banks are also rescued. Yes, bank was rescued. But when those banks are rescued, you can work out a system of rewards and punishments. You can't do that for a state-run bank. And as I said, where there's no ownership within the bank, there's no ownership outside the bank. By saying that everybody owns the bank, we actually ensure that these banks are owned by no one. And if they are going to be owned by no one, and if they are sitting on a huge stash of capital, then obviously people will come to rob those banks of their capital, which is what has happened. So why are we surprised that the private sector is essentially picking up the money from there? I mean, anybody is picking up the money from there, the smarter ones, and getting away, and we are not able to track those back. If that is not the way a banking sector can operate, what makes us even think that a government's job is to run contracts. A government's job is to ensure that the defense of their country is ensured. A government's job is to ensure that the policing is proper. A government's job is not to run a bank, an insurance company. And that is where the problem comes along, that the government, where would the government would be able to put in people to be able to run those institutions? They won't be managing. I mean, the government itself said that the reason why so many banks had to be merged was because the finance ministry was getting too stretched to be able to manage those banks. So that's exactly the point. These banks cannot be managed, and they are not supposed to be managed by somebody sitting at any place looking at them files every day. The banks are supposed to have their own checks and balances. And that is why you need the banks to be owned by the markets, whoever is able to rustle up the capital to be able to own those banks. If in the process the banks end up being a bad fish, sure, there has to be the regulatory part which can immediately take the responsibility to be able to correct out the mess. But but to avoid doing all that work, when the government says, no, I will run a bank, then it actually integrates, sort of marries into the entire problem and creates problems for everybody around. And as I said, the poorest pay not only by getting a bad deal from the banks as a depositor, but also a bad deal by paying through their tax for recapitalizing of banks, which essentially will not be, I mean, since they're in the weak state, they'll not be able to lend for the MSME sector. They'll not be able to lend for microcredit. They'll for as microfinance institutions. That's not their job. It's let somebody else do that job, and that is essentially what is the problem at the base of the entire banking crisis, which Ujit Patel has pointed out very clearly. He says in this in lots of his pages he's talking about the same thing, except that he doesn't, you know, let his prescription become the overriding thing when one comes out after reading the book. If a bank, and in this case I'm referring particularly to the public sector banks, if it sees that there's an NPA and it should actually provision for it, either RBI can sit in the bank's boardroom and go through each NPA, each loan account, and see whether the bank has provided for it, or leave it to the good sense of the bank's chairperson to decide whether the loan needs to be provisioned. This month, I was listening to the earnings call by many of the chairmen of these public sector banks, and what I noticed was that almost each one of them were essentially sort of leaving the onus on to basically one, the Kamath Committee. That was the Kamath Committee would come out with the provision with the rules, and I think Kamath Committee is supposed to give its report today. And as we know, that the Kamath Committee is essentially working out that what should be the restructuring rules for large ticket borrowing. But to that, and also taking a very conservative position on provisioning for loans which are clearly going amiss. This is where the RBI can only set the warning. But can RBI, for instance, punish the banks? And I'm really saying so because this is something which Urjit Patel has also referred to. In fact, his run-in with the former finance minister, Mr. later Arun Jaitley, was about this particular approach. That he said, I do not have the authority under the Banking Regulation Act of 1949 to be able to punish a public sector bank for misdemeanor as much as I can do for a private sector bank. Very true. The government of India does not allow that role. There is very few evidence in our collective memory where a bank chief has actually been hauled up for NPA problem. They may have been hauled up for something else, for giving this loan or that loan. But for making a bank weak, has any bank chief ever been been taken to task? No. And if they have not been taken to task, then obviously they will know that that is not something on which their job report ends up. Their job report will be made, and that is where again this dichotomy of the government running banks and then asking a regulator to run the banks as if they are the same terms as the private sector becomes impossible to maintain, and even more impossible to maintain when there's a crisis in the economy as of today. This is where almost you can see almost all the problems coming up to this point. For instance, you talked about the IBC. Now, in IBC framework, the debt recovery had just started rising. The banks had started getting to understand what are the laws and the rules and the bylanes through which companies will try to weasel out of having to pay for their misdeeds. Just when it was happening to and sort of starting to become a stable operation, the government moved in to say that we are holding the IBC in abeyance for the next 6 months. And that is where the problem comes along. Even if it was necessary at the time, with the sufficient safeguards that a particular period can be given a sort of a blanked out or whatever, the IBC should now be back in operation. If a private sector today, if any, and I'm not just saying private sector, I'm saying any company, if it is going to get comfort level from Supreme Court in terms of moratorium, in terms of interest, in terms of so many other things, then it should also be fair that the government should say that the IBC therefore can now come back into the market. That if you are getting the benefits, you should now also be responsible for the duties that you have to do. I can't see, if it is not done, then obviously there will be a problem that the two ends of the reading that will go out is that it is a sort of a free for all, which is why I say that that probably the more people being part of the discussion now is one good happy step that has happened. That in the courts and other places, the government, discussions are being happening, unlike those which used to happen only in the confines of a ministry or the regulator. That there are lots of more people, the more stakeholders in the discussion makes it more difficult to take one-sided positions.
My last question for today is that the fiscal dominance that Viral Acharya has spoken about, also Dr. Patel has written about, that you've also explained that how the government actually is forced to to sort of create conditions where NPAs will rise because it has no fiscal space. Therefore, it relies on banks to give out loans whenever it wants to increase investment level in the economy or give a stimulus to the economy to make sure there is growth. Such is the situation there is right now. The government is facing a severe constraint on the revenue side because tax collections are obviously impacted by the COVID. They were, as it is, not doing great to begin with, even before COVID. There's no way they can do much disinvestment or raise revenues in any other way. Even other taxes, such as, the whole problem of the GST compensation for the states is flaring up. So there is a worse the fiscal constraint is no better right now than it is at other points in time. And the banking and the financial side is also like the financial stability report of the RBI projects is going to get worse. So both side problems are going to get worse. Neither Dr. Acharya nor Dr. Patel have said that how do you deal with this problem where both the pressure points are going to become a pain. Do you see the government thinking along these lines? Is there anything you catch in the government going on, trying to solve this impossible problem
Yeah, we always have impossible problems uh,
of our own making?
of our own making. It's very interesting that you brought in the issue of the states. In fact, also thought that that's something that if you have to deal with the last. I would say that in the current, much as there's a debate about GST, and that's some other debate about some other time. But the very fact that the states are asking RBI to directly monetize them instead of having to go to borrow from the markets is exactly what is another expression of fiscal dominance, except that in this case it is not happening from the center, but having seen what the center does, the states are saying, let's also work the same route. Why shouldn't we ask for our share of the pie?
Free for all.
What they are asking is equally indefensible. It is not something that should be asked for at all. But if one wants to castigate the states, one has to say that it's the center which has shown them the line. It's so the states can only say that that's a point. But that shows that what happens when fiscal dominance becomes the accepted narrative in an economy. About whether what is the dominant, what is the understanding within the government. One of the good things that at least from the readings, what I read, and here I would take a bit of the Finance Commission, what's been saying, because I consider the Finance Commission this time as, for obvious reasons, and you know why, as actually the Finance Ministry.
Yes, I saw your tweet also.
So the Finance Ministry, so the Finance Commission isn't in favor of, breaking down this division between the fiscal and the monetary authority, which I think is a very positive thing to happen. It's also saying that the states have to go, if they want to go for borrow, if they want to extra money from the center, then it has to be certain rules based, which I quite like. We might quibble about whether the rules are more strict for the states or not, but definitely there has to be a set of rules. You can try to work the rules, but the rules are definitely necessary if people are to have not a repeated bouts of crisis and we don't get caught in a low productivity trap. Remember this. This has also the other thing that I notice is that there are signs, and those must be coming from the Finance Ministry, is that the SEBI, which is often missed in the discussions about the discussion on fiscal and monetary authority, has started taking some fairly strict steps, even though it has had to sometimes give a bit of relaxation. But the rules on, for instance, that companies have to show the state of their loans on which they have defaulted, even if with a 1 month gap, is something which I would say is a very good thing that has been brought by SEBI. It has often not been understood, but again, sunlight helps a lot.
No, you're right. In fact, there was a SEBI rule last year where they forced banks to within 24 hours disclose to the stock exchanges any discrepancies between their reported NPA levels and what the RBI's inspection reports had found. That was another instance of this of SEBI stepping in for greater transparency on NPAs. In this case, in the books of the banks.
Exactly. And I think that these are the ones which are actually helping to create, as I said, bringing in more constituencies into the discussion. And overall, the very fact that today one might quip that finance ministry is not quote unquote a powerful entity is probably a useful thing, but because it is allowing for larger interests to discuss what should and shouldn't be done, and it is allowing for less of what might call an imperial position to push the dirt under the carpet. That is not happening easily. And that I think is something which is necessary and something which is useful and something which will be the saving grace in this round of NPA. The very fact that even before the finance ministry has given out or rather has announced whether it will be giving into support to different investment groups, sectors for loan forbearance, there's a discussion now happening, like the one that's happening now between you and me, is important and is helping to create, to institute some sort of checks and balances. And that is where I think I take it on is something useful. But a lot of it will also happen, will need that the financial repression, the law point will again and again come down to the fact that if the government keeps on holding on to 70% of the financial sector as its owned companies, which is the state-owned banks, then the chances, the risks will continue to be there in the system. And that will not go away unless we catch this challenge and address it.
Correct. That's probably the only silver lining to the very dark clouds that are gathering on the horizon as far as the economy and the financial sector are concerned. On that note, let me thank you. Thank you so much for taking the time out. I learned so much from our conversation today, and best wishes again to you for Teachers' Day.
Thank you, Pooja, and all the best for everyday economics.
Thank you.